All right, starting with WION's global markets and economic health check to see what happened during June. The usually quiet month for risk assets was quite the opposite. Crude surged by 6.3%, making it one of the best performing assets despite some cooling after the 12-day war between Iran and Israel ended. The volatility, though, was evident from differing bets on US President Donald Trump's tariff headlines almost every other day through the month. Bitcoin gained nearly 1%, edging towards its all-time high of over $111,000. However, gold took a hit on risk-off bets. Bullion was down nearly 1% last month. The dollar fell sharply by 2.6% as the sell American Treasuries trade trend continued to weigh on the currency. Moving on to Asia-Pacific stock markets, Japan's Nikkei led the gains in Asia with 6.7% gain, followed by the Indian stock benchmark. A recovery in emerging market stocks was a distinct theme again in June. Indian stocks closed 3.2% in the green, showing signs of recovery amidst the pull and push in the trade war talks. Indian stocks have been running up, with the defense sector showing the biggest gains after Operation Sindoor. Chinese stocks too gained nearly 3% after a trade truce agreement with the US eased economic slowdown concerns. In the Americas, Wall Street extended the gains from May, with benchmarks closing at a fresh record high. The S&P 500 gained 5% to close above 6,200 points for the first time ever. That comes after the benchmark index gained 6% in May, marking its best May since 1990. The tech-heavy Nasdaq surged even more. Nasdaq soared 6.6%, extending the nearly 10% surge in May, driven largely by solid earnings and Nvidia's advance as the top most valued firm in the world. Canadian and Brazilian stocks also ended June with the gains. Across the Atlantic, European stocks, though, took a hit on the uncertainty surrounding trade talks with the US benchmarks. Across the region closed June in the red. The French CAC led declines, closing 1% lower, once again led the gains in the region with a gain of 1.3% to extend the 6.7% rally in May. UK's FTSE ended the month with marginal losses, and German DAX closed June 0.4% lower. However, the South African stock extended 2.2% in addition to the 3% rise in May, keeping the narrative of emerging market rebound intact. Let's now turn our attention to the overall economic outlook. Let's look at the Asia-Pacific region now. Trump's trade war worries have weighed on the outlook for global economies. However, India is still expected to be the fastest growing major economy in the world. This with bets of a significant slowdown easing. The Reserve Bank of India's jumbo rate cut, it's widely expected to increase consumer demand and in turn boost economic growth. The outlook for the rest of Asia, though, remained negative. For China, the outlook is still mired in doubts from the recession in its real estate crisis. However, the latest trade truce with the US are good signs for the economy, as reflecting in a rebound in manufacturing activity. However, the economic outlook for Japan and Aussie mirrored worries from Trump's trade war. In the Americas, the economic outlook for the US, Canada, Brazil and Argentina shows trade tariffs are likely to hurt economic growth. For the US economy, stagflation bets are still weighing on sentiment and the outlook. JP Morgan still sees a 30% chance of a US recession this year. The economic activity expectations for Canada, Brazil and Argentina were also cut. On the other side of the Atlantic, the negative outlook seems to be more widespread. The expectations show the clouds are darkening again for the UK and other European economies. Trade war worries continue to cloud the outlook for the region. The story wasn't very different for African economies, where the outlook remains negative.